Hey there, let's discuss this particular question called Alflonnso. And we've been given some company information, right? We've been given some different products, I would say. And then what are our requirements? Let's look at that. So, number A, there is 2 requirements within it. So, it's for 8 marks. So, 5 marks for the first one, 3 marks for the second one, right? So, in the first one, we need to explain how activity-based costing may help the agro division in assessing the profitability of the 3 products. So we need to use ABC, or how ABC is likely to help agrochemicals division, right, in assessing the profitability. So similarly for the second one, again using activity-based costing, right, using activity-based costing and excluding the value of the grant from the GPO, calculate total R&D and waste cost treatment of the 3 products. Okay, we just need to calculate only, excluding the value of thing, and then we need to calculate R&D cost and then waste treatment cost. Okay, so without grant, okay, that can be done. And then for number B, we need to, using your answer in part A2, calculate the average profit per liter of each of the 3 alternative products over the expected life cycle and comment on the results. So first part is we need to calculate the average net profit for each liter. Second is comment, right, calculate and then comment, right. And we need to talk about EMA, environmental management accounting, how it can help improve performance of agricultural division. 8 marks, so we need 8 points for that, right, 1 marks per point. Okay, let's look at this. So what is this company doing? It's a large producer, so they have a economies of scale, and they produce industrial chemicals, okay, with division in 25 countries. So it's a MNC, right? So MNC has its own things associated with it, right? So there is transfer pricing issue, there is a lot of things that happen with MNCs. And the agrochemicals division produces a chemical pesticide known internally as ALF, okay, to control the pest in a crop, which is worldwide significance. So okay, they have a worldwide significance economically and for food production. So they produce it economically, so economies of scale is there, and for food production, right? So other thing is, it's only effective for a limited time. Okay, so it's only limited time. Okay, so limited time effectiveness, right? So it's only remain effective for limited time, after which the pest become resistant and replacement product needs to be found. The scientific study has shown that the current variant ALF6 is becoming ineffective in controlling pests, and in some places, right, it's becoming ineffective, so they need to develop new solutions. Already ineffective, so that means competitor can take their place if they don't develop a new product, right? So it has accumulated in the soils to levels which may have significantly reduced crop yields in the future, so if it is continued to be used. Okay, so they have accumulated in the soil, which is reducing crop yields, right? So the agrochemicals division is evaluating 3 new products to find a replacement to ALF6. Okay, they are finding 3 new replacements. Replacements is 3, right? So ALF7 is produced by small chemical modification competition to existing products and require little R&D resources to develop it, as it is closely related to the current variant. It is only expected to remain effective for 3 years. So its life cycle is only 3 years. Remember, there was a requirement, something regarding the life cycle. So that's why I have highlighted that, okay? So effectiveness is only for 3 years, and it's unclear whether ALF will accumulate in the soil in the same way as ALF 6 does. So it's still unclear, right? So that means 3 years soil accumulation unknown, right? Okay, what about the red? So red is a new type of pesticide which will incur large cost of R&D. Okay, large R&D. And what else? To develop a commercial version. In addition, the agrochemicals division have to fund long-term scientific study, right? Long-term scientific study into the effect of red on the environment at a cost of 4 million for each of the 15 years. So 4 million every year, huh? So 4 million at the rate 15 years, right? And so scientific study into the effect on the environment at a cost of 4 million for each of the 15 years that the product will be in use. So life cycle is 15 years. So 4 million at the rate 20 years. Okay, that's how much we have to spend. So production of red generates large amount of toxic byproducts which must be treated in the waste division treatment facility. The production plant used to produce red should be decommissioned for cleaning, an estimated cost of 45 million. So there is some decommissioning cost that we incur. Okay, so there is some decommissioning cost at 45 million, right? So that will be how much? Generate toxic byproducts which must be treated in division's waste treatment facility, and then the production used to produce red must be decommissioned for cleaning, right, at the end of the life of the product. So after 15 years, right? So those are the things that we need to be careful about. So life is 15 years and decommission cost, right? 45 million, right? And green is a form of naturally occurring chemicals, okay? So green is a naturally occurring chemical and thought to be safe and not to accumulate in the environment. So it's already sure, right? We could talk about that benefit. Useful for 8 years. Naturally occurring 8 years. And what else? It requires large amount of energy. Okay, significant R&D will also be needed to produce an effective version, as green remains active in the environment only for a short time, and because of this, so it is unsuitable in harsher climates, unsuitable for use in climates where crop production is already difficult. So it does not fare well in different climates. So there will be R&D expenditure, and then there will be unsuitable not so good. Right. And then funding and government warning. The Global Food Production Organization (GFPO) is a non-governmental organization. Okay, it's NGO, right, which funds new ways to increase global crop production, especially in the region where food is already scarce. Funds new ways. So GFPO has already agreed to make a significant contribution to the R&D of producing replacement. So it's going to contribute to R&D, but will be unwilling to contribute to the R&D cost for green because it cannot be used in every region. Okay, so it's not going to be funding green. Okay, green is not getting funding. No funding. Right. And similarly, a number of governments in countries where Alflonnso has licenses to operate its chemical business have warned that the company of the potential public disapproval should the agrochemical division choose to replace ALF6 with a product unsuitable for it. So the agrochemical, what will happen? So the countries or the number of governments have basically warned the company, right? Should the agrochemical division choose to replace ALF6 with unsuitable areas in areas where food production is scarce, right? So let's just say there is some government disapproval, right? Let's look at this as well. Profitability of replacement product. So the newly appointed CFO of the agrochemical division has asked you as a performance management consultant. Okay, that's our role over here. PMC for your advice. One of our analysts in agrochemical division said has produced a single period statement of SOPL, so single period, to show the profitability of the three products which they are considering for replacement. I think the analyst calculations are too simplistic. The cost of the waste treatment are apportioned on the expected revenue. So cost is apportioned based on what? Expected revenue. This is consistent with Alflonnso's traditional group accounting policy, but I don't think this gives an accurate costing. Right, that does not give an accurate costing. CFO has also commented, I watched a presentation recently about the use of life cycle costing and how EMA can help reduce what costs in categories of conventional, contingent and reputational cost. So in terms of conventional, contingent and then 3 reputational cost, and then help improve result as well, right? So we need to talk about that as well. So appendix 1 is also given, and what they done is they have revenue per thing, per liter, and quantity sold is also there. Revenue has been computed based on the sales, right? And direct material, labor and energy is there. Factory overheads is allocated based on what we don't know. Environmental study is there for red, right? Toxic treatment for byproduct is higher. Byproduct, okay. Our figure exclude the contribution from GFPO, exclude the contribution, okay, towards the R&D cost of the new product. It looks like red is very much profitable, ranking it 1, 2 and 3, right? And waste treatment is an overhead cost incurred in the division's waste treatment facility. Currently, cost of waste treatment are apportioned to the product according to expected revenue, but not on based on how much they are wasting, right? So total cost of waste treatment facility which processes a total of 55 million waste, 55 million at the rate 300 million, right? 300 million. Any waste treatment capacity not used by 3 division can be used to treat waste created during the manufacture of other products in the division. 1 liter of waste byproduct is produced for every 12.5 liters of ALF7 produced. Okay. 2.5 liters of red produced, 100 liters of green produced. So 1 liter of waste byproduct for every 12.5 liters, right? So we need to look out for this number as well, so that we need to calculate the waste treatment cost, right? So R&D has been incurred in the division. In accordance with the group accounting policy, R&D are not currently apportioned to individual product. The annual cost of R&D is 60 million, has a total of 30,400 R&D hours available, and then basically of which 800 hours is for ALF, very less, right? Red has very less hours, and 4,000 is for green, right? So what we could have done was 60 million divided by 30,400, and then it could have been done that way, right? So it could be done like as such. Let me just open a untitled notebook. So 60 million, right? 60 million divided by 30,400. It could be done that way, and then based on that, how many dollars per hours, and then based on that we could divide it according to different product. Okay, for ALF, green, red, right? So based on that we could divide that. Similarly for this thing as well, what can be done is how much are we producing. So 85 million, right? Or let's just calculate for this 100 million. So 100 is being produced. So each 100, how many does it produce? So for every 12.5 liters of ALF produced, it produces 1 liter of byproduct waste, right? Byproduct waste. So 12.5, how much will that be? Let's calculate 100 divided by 12.5. So that will give us $8 or 8 liters of waste, right? So that's for, what is this? Single period of SOPL, right? And then what's our cost over there for waste treatment is okay. What is this for single period, right? But what's our requirement? Okay, for a single period only we need to calculate it. So for that, okay, so per liter cost is 300 divided by, how much is that? 55, right? 55 per liter cost is 300 divided by 55, 5.45. it's in million, it's in million. Million liters, right? So this will be in million, so 8 million liters, right? 8 million liters times 5.45, that's the cost per liter. So it's 300 cost, right, for the annual cost of treatment facility. So 300 divided by 55. Okay, so that will give us a cost of how much? 8 times 5.45 will give us 43.6 million for this product only. Similarly, we could do something similar. Okay, so let's just get rid of this thing. So we could do something similar for the other product. What is it? The other product is red. Right, for red we could see total quantity produced, and then we have waste per liter, and that will give us total waste when we divide both of them, right? So total quantity is how much? How many? 85 million liters, right? So 85 divided by 2.5, I think. Right, for let's say the other thing is what? Not red, what was the other one? Green. Right, for green it's similarly 75 divided by how many is it? How many is it? 2.5, and then for every 100 liters, so it's 100, so that will give us 7.5 for this, and this will give us how much? 85 divided by 2.5, so that will give us 34 liters of waste. And what's the cost? Cost per liter of waste is basically 5.45. Total cost for this is 34 times 5.45 will give us 185.3, right? So similarly for this, the cost is significantly lower, okay? Into 5.45, 40.875, right? So that's the cost, okay? These are the cost. And similarly we can do for R&D as well, but now let's move on to the model solution. I've already wasted a lot of time, right, just doing this. So whenever we are looking at a model solution, let's look at the answer tips from marker, right? So where is my pen? Over here. Okay, my pen is functional now. So this is really large amount of information to observe in this question. You should anticipate this and practice a broad range of questions, okay? Okay, so there are only 5 marks available here. So briefly explain why ABC allocates cost more accurately before focusing on the true costs in the scenario. A detailed explanation of ABC and its advantage is not needed, would waste time. Okay, why ABC allocates cost is more accurately is more what you need to talk about, not ABC and its advantage, right? So part 2 is straightforward, 3 marks on the ABC calculation, okay? Just 3 marks only. So methodological approach of the question is calculated here, working throughout each of the item in the scenario in turn Good candidates will identify used benefits in life cycle approach in this terms of accuracy, right? And key marks or key scoring points is to relate your EMA knowledge to the scenario. Okay, for ABC, why ABC, how it would help, right, for 3 profitability. So remember right now what happens. So ABC provides cost according to their drivers, right? So it allocates product cost to products based on activities which actually drive the cost to better allocate costs, right? At Alflonnso, group policy level is what right now is where is that group somewhere there I saw somewhere. Okay, group policy, traditional group policy, right? So it's too simplistic. So it's traditional one, right? So group policy is to account waste treatment overhead on the basis of revenue, which is arbitrary, right? Why on revenue? So the analyst calculation do not seem to be allocated to specific product cost at all, right? It does not allocate based on the cost, right? So this may be appropriate elsewhere in the group where different products consume similar level of overheads, but these 3 new products being evaluated consume quite different amount of R&D and waste treatment overheads. Okay, so they have directly addressed the issue of R&D and 2 things, right? So those are the overheads that should have been allocated as per ABC, but they have done it in traditional way or like based on revenue. So it is therefore appropriate to charge this cost to the products on the basis of, it is inappropriate to charge this product on the basis of revenue. Charging the cost on the basis of activities which drive them, which are research hours and then the waste byproduct or volume of waste byproduct for R&D cost and treatment respectively, will give more accurate costing. This will provide a better basis on which to evaluate the new products and set appropriate pricing, right? It will help in product pricing and then which product to launch basically. And remember we did the calculation before, it's not worth that much, so it's only 3 marks, so don't waste too much time on it, do it in spreadsheet, right? So the quantity of thing is already given, right? Of course it's very less time for the calculations, but still, so 3 times 1.8, that's how much you should dedicate for that. So let's just assume less than 6 minutes. So what I wanted to do was basically just calculate all this costs, right? So calculation of waste treatment, right? Like we did, where was that? My notebook is somewhere here, and where did I go wrong? Okay, 8, okay, it's fine over there. So 43.6, 85.5, 44.1. How come it's 0.75? How? Okay, I made a mistake over here because I did not use a calculator. So it's 0.75 and then 4.1, right? So it's very less. For R&D similarly, what we need to do is just divide the total cost. So I mean 60 million divided by 3400, and then after that times your hours, right? Times your hours. So 1.6, 16.8, 7.9, right? So what else do we need to do? And number 2 is it? So number 2 is done, right? So using your answer, we need to calculate average net profit of each of the 3 alternative products over their life cycle. Okay, so over their life cycle, remember we need to remember over here is nothing is different. So revenue is same, right? Revenue is same, the direct material cost is same. So factory overhead is already given. Where is that? It's given over here, right? So that's the same thing. And what we need to do is basically waste treatment, right? Waste treatment, we need to allocate it. So waste treatment was basically from part A1, part A2, right? So waste treatment cost is already calculated right over here, right? And then what we need to do is waste treatment cost is over the life cycle, right? So waste treatment cost is over the life. So the duration of each individual life duration is how much? For the ALF it's 3 years. Remember we wrote it in the side. 3 years, 15 years, and then 8 years. So 3 years, 15 years, and 8 years. So that will give us a total net profit of before life cycle cost. Okay, and before other life cycle cost we get 457, 1102, 1455. So it looks like green is more profitable, but let's see, we need to add this thing as well. There is some this cost as well. You see, that's why reading the requirement first will help you identify. I read that word expected life cycle. That's why I highlighted this years of how many years they will be functional. Okay, that's why I highlighted that. That's the sole reason for it. And there has to be some kind of what scientific study, 4 million for each of the 15 years product, for 15 years period, right? So it will be 4 times it will be 4 times 20 years. 4 times 20 years I highlighted over here, right? 15 years of use and then 5 years afterwards as well. That is there. And then we need to also have a decommissioning cost also added to it. So 80 million, so 15 times 20 times 4, and then decommissioning cost. And we have used R&D cost have not been allocated right now, but it will be R&D cost will be 1.6, 16.8, 7.9, right? And when we see it, the total net profit over the life cycle is 144.6, and then here it is 190 something, and then this thing, right? And that is for over the life, right? What are we supposed to get? Average net profit of each of the 3 things, right? So that's for 3 years. We have to multiply by 3 years quantity as well. Number of liters produced over the life cycle is 300 million. 100 million multiplied by this 100 million quantity produced in single period times 3. So similarly for red, 85 times 3, or 85 times 15, 85 times 15, right? And then for this thing is 75 times 8. Okay, so average profit per over life cycle is 1.52, 0.75 for red, and then for green it's 2.41. You see, it was very profitable when you are looking at one period, right? For red, but when you are using life cycle, you see the profit has the lowest profit. Which has the highest? The greener ones has the higher profit. Why is that? Because it does not have a scientific study cost and decommissioning cost, or even its waste treatment cost is significantly less than ALF. Okay, so we need to comment on the result, so we can just make that same comment. Okay, so in the appendix 1, red was profitable, right? So it does not consider cessation costs such as decommissioning cost, right? Whereas in red, what has happened is that when red has the lowest, right, unit profit, the highest being the green, right? The change has occurred at the R&D cost and cost of study, which will span 80 years, right? 20 years. And the decommissioning cost has been recognized. Knowing that the entire life cycle of a product will help the agrochemical division to better evaluate its investment decision, determine appropriate price, and generate a acceptable margin. Okay, so what has this done? And before we would have thought like $13 would have been enough to cover our expenses, right? But that's not going to be enough if we are going to make a red, right? We need to charge more, otherwise the profit is only 0.75, right? It's not worth it. So if we are going to produce ALF7, again it has some level of profitability, but in order to reach to that level, to what is that, 2.41 minus 1.52, whatever the difference is, the prices has to be increased by 8 plus whatever this difference is. Okay, make it profitable as green. So this will help us make that decision for us. Okay. Other thing is, how can environmental management accounting help improve the performance of agricultural division, right? uh, how EMA help reduce cost in categories of contingent. So in terms of conventional, contingent, reputational, and help improve performance, right? So you see, just classifying by the heading will give us a little bit of structure. So environmental management accounting is what? It's basically involves producing or production of financial and non-financial information to support internal and external. So internal environmental management process, not external, I mean. Mm, but you could definitely report some of these figures from here as well, right? Which will help you aid to do that. So to support internal management accounting management process, right? So this could involve measuring the physical movement of inputs to production process, such as materials and energy output, such as waste, right? It could give us all this information, right? So you could do some flow analysis as well, right? So the agricultural division could also record financial data based on cost and savings related to the environment. It appears that, right, it's not really an area where people uh, perceive that it would be tested, but you see, there are always surprises with ACCA. One of the questions is always a surprise, right? So that's happened in this exam session as well. It was in December 2016. Right, and then so it could be like we could assess the cost based on financial data as well, right? Based on cost and how much savings we are making based on the environmental management accounting data that we are getting. Based on that, we could do some analysis on that as well. And it could be, right, it could be, but it appears that in common with most other businesses, these costs are not currently identified by Alflonnso's accounting system, and they lie hidden within the overheads, right? They lie hidden within the overheads because they are using a traditional set of accounting, right? So it's according to traditional group accounting policy. They don't track these costs. So managers have no incentive. So what's not being tracked does not get done, right? So what gets measured gets done, but if it's not being measured, it does not get done, right? So there is no incentive as well to reduce this environmental related cost, right? We are talking about waste treatment, but how effective is it, right? There is no benchmarking for it, right? With external data or like with past trends and as well, it's not mentioned within the scenario right now. So it's the information they have provided is insufficient to make that kind of conclusion or assumption as well. Okay. So EMA, what does it do? It allows to identify environment related costs and take steps to control it, right? So such costs can be conventional cost, contingent cost, reputational cost. So in terms of conventional cost is what? So these costs include cost of energy and raw materials. Remember, they mentioned somewhere that it takes a lot of energy. I think it was in green somewhere they mentioned about that. So is a non-common energy which is to fund new ways to not over here. Where is green? Okay, relatively large amount of, so production requires relatively large amount of energy, right? So that is being consumed by green, right? And such costs remain hidden within the overheads, right? So you are basically subsidizing the other product some products are compensating for the other one, right? So you're just subsidizing the other product because you are just hiding the cost itself, okay? Or it could be that you're not subsidizing, or your cost simply is too high, and because you have a policy which is based which basically tells you to basically think about costs like arbitrarily, like in this situation, what have they done? They had allocated the cost associated with environmental or waste treatment. Is it waste treatment, right? Waste treatment based on revenue, right? So that is arbitrary. Why revenue, right? Why not something else? So those costs tend to remain hidden, and the energy cost of the three new product in the analyst income statement are simply combined with in the analyst income statement. As you can see, the energy cost are simply combined with raw material, right, and direct labor. So this does not, for example, highlight the high energy cost, right? We can't make a comparison because it's just a lump sum you see in this thing. So for green it's 565, but how much of that is associated with direct labor, right? How much of that is with energy, right? So that's, we are not getting that information. And you see, just by looking at the whole amount, you're comparing 565 to reds of 724. Why is that, right? Why is it looks like green is doing better, but it's not a complete information, right? It does not provide us information about energy, how much energy is being consumed by green, but we just know it. Why does it know it? Because there was a statement in the scenario that was made earlier, right? As I discussed earlier, there was what did they say? Green has a relatively large amount of energy, right? So it incurs, let's say, large amount of energy cost. So that's not apparent in the appendix 1. So given they are unaware, they cannot take any actions to redesign the specifications or production process, right, in order to reduce that cost. Or contingent cost. So contingent costs are what? So it's a cost which will be incurred in the future. For example, plant use, cost of plant used to manufacture red, right? So red has a what significant decommissioning cost, 45 million, right? But occurs 15 years in the future, so the estimation is unlikely to be accurate, right? So identification of this cost will at least allow agrochemical division to more accurately estimate the cost of these three new products, okay? So if you're just looking at from a 1 year perspective, then you're missing out. So in the 1 year perspective, you don't have the decommissioning cost. That's only going to come after 15 years in the future, right? It's only going to happen at that time. So identifying this cost at the early stage will allow managers to redesign the specification and or production process for the product. Redesign the specification by what do we mean by that is that in this circumstance we can just say that if we were to somehow make the product less toxic, which would mean that we would not need to clean it after, or the production plant does not need to be cleaned after the product has been decommissioned, okay? If we can do that, or if we can adjust some of the production processes itself, right, to make it more greener, that would reduce cost and prevent managers from focusing only on the short term, okay? Only on the short term. Without contingent cost, it would look like very short term. Basically during this time, so if it was without the life cycle costing, what would have happened? The managers would have been focused on the red, right? Whereas that's hurting the the objective of the company, which could be maximizing of shareholders wealth, right? So it could be that. And this is encouraging what? This is basically encouraging short term behavior, right? So there will be reputational cost as well, right? So reputational costs are what? It is incurred when an organization act in a way which may cause harm to the environment, right? It includes sales lost as a result of reputation. So these costs are hard to quantify. For example, the accumulation of existing product ALF6 in the soil is to have a potential effect on crop yields. Okay, so it could have a potential effect on crop yields, which may lead to future claims. Okay, future claims from the users to the loss of sales or to the loss of sales. So it could be either the claims or loss of sales due to the potential harm that is being done by this product of ours to the environment, right? So similarly, Alfonso's failure by producing green to improve product crop yields in countries where production is already scarce is likely to arouse disapproval by public and governments in 25 countries where it operates. This again may result in sales or refusal by government to purchase or to grant licenses to Alflonnso to operate, because they are the granting authority, right? So they could forfeit our license. So making managers aware of this reputation cost should focus their attention on the need to manage the risks of them occurring, right? So due to all these aforementioned reasons, environmental accounting would help agrochemical division improve its performance, right? That's the ending punchline. That's it. Right, description of EMA will earn us 2 marks. So 3 marks for each cost category, right? So it's 8 marks right there. So it could be 2, 2, 2, 2, 2, right? So 2 marks for reputation, 2 marks for contingent, 2 marks for conventional, right? And then for 2 marks for just explaining what EMA is. Right, and then you have to be specific as well. By what do I mean by being specific is basically in this scenario they talk about 2 things, materials and energy as an input, right, in the production process, and then they talk about output as a waste as well, and then they talk about these 2 things, R&D and waste as well, right? What else we need to look at? Okay, revenue and direct cost overhead given 1 mark. Waste treatment cost is 1 mark. Before life cycle costing, net profit is 1 mark. Scientific study 1 mark. Decommissioning cost 1 mark. This thing is 1 mark. Total liters is 1 mark. Average profit per liter over LC is 3 marks. Comments is 3 marks. Okay, so 3 marks for comments and 6 marks for thing, right? So even though if your answer is incorrect in calculations, you messed up somewhere, you'll just be losing 1 or 2 marks. But if you made the comment based on that, you can assume and go as well. It does not matter. It's a 1 mark rule thing, right? So you won't be penalized for your mistakes done before, right? So it won't trickle down, let's just say that. And for number A1, we could just there would be generic explanation of purpose of ABC is 1 mark. Application to scenario is 1 mark per point. So if you had just written generic explanation, you would just be earning 1 mark out of 5 marks. Okay, if you had applied it to the scenario, not maybe perfect, but still you could have earned the rest of the marks. Okay, so similarly for calculating waste treatment cost, it's 2 marks. R&D is 1 mark. So R&D was very simple, right? Even waste treatment was a little bit just 2 steps process, but that's why they allocated 2 marks for that. Okay, so that's one thing. And then we need to look at examiner's comment. So part A was poorly done by candidates, did not address the demands of the question. Candidates gave a developed definition of costing technique whilst technically correct on every occasion, did not address the specific question demands as to how it may help entity determine the specifics of product profitability. It just did not, it did not talk about the waste R&D, right? It did not talk about, we could have addressed it by how. So we could have talked about how ABC will basically not hide, or it's suitable in a higher overhead environment, and this is the current case over here. And then they could have talked about waste and R&D. And so they did not address the demand, right? And candidates did not address the demand, and this relates to the point made previously with regard to definition and rote learning, right? Maximum of 25% marks can be gained in this way. Candidates should be aware that full marks could be obtained for this part of the question without any definition being given. Purely application. Okay, so purely application. You see the markers comment, right? So full marks could be obtained for this question without any definition, right? So part A was a brief question on specific calculation and was done well by those who undertook it. Okay, so basically B was easy, let's just say that. So part B was generally passed by those who took it, but most candidates showed lack of technical competence by being unable to distinguish between costs that occurred on an annual basis and those that relate to the product's overall life. You know why did this happen? Because they missed one single they missed two hints. Okay, so it was given, the CFO had mentioned that the analyst had prepared the statements for a single period, right? And then there was another hint over here right in the title as well. So there was two hints that if the candidates missed during an exam sitting, that means they would have basically lost all the marks, right? Because they could not compute the life cycle costing. They assumed that this whole thing was over the life, right? Over the life of the product, but that's not it. So that's why they made a lot of mistakes on that. Okay, so it says that's why the examiner is commenting that people lack technical competence. Okay, so it is also worth highlighting to candidates that when a question asks for comment on the results, what is short is more than this figure is larger than another. Why, right? So they want why, not the description of the figures. Okay, not the description of figure. Why? What did they do? They just simply said that okay, green is more profitable than red by this much number, by this much price, blah blah blah, right? So it's just they increased by this much, there is a difference of this much, profitability can be increased by this much, merely explaining the figures only. But why did that happen? You can clearly see if you had done that calculations, right? If you had done that calculations, you could have clearly seen that red had a huge cost on decommissioning, right? Similarly, they had a significant scientific study which was happening every year at a cost of 4 million. Times 20 would give us 80 million. That's a significant figure, plus the 45 or 55, whatever that decommissioning cost was. The total itself would have shot up the figure to for red by 125 million, right? So by that much the profitability would have been decreased, right? We could have just, the candidates could have just discussed that much only. So in the context of this type of question, commentary being short is with regard to implications of the figure. would they change a decision? Has one of the techniques as opposed to another fundamentally changed the product cost, right? So comparing between the current single period costing versus life cycle costing, right? That's what they are saying. Would they have made a different decisions based on that, right? What significance are attached? So your commentary on the figure here should add more than be seen from the figures themselves. Otherwise we could have simply said like even anyone, right? So even a 3 year even a 6 7 years old kid could tell you like, okay, this figure is greater than this, right? So no need to explain that, right? You need to explain the causes behind it. Why is that happening? Very good point, very good point by examiner comment, right? Very good point. Part number C, environmental. I'm pretty sure several candidates only briefly gave a brief response, right? Which only defined or explained EMA. Question is assuming that some technical competence in the area of EMA exists and asked how the principle of it would potentially benefit the entity. Once more, and consistent with the demands of the paper at its level, its applications of the technique to the entity's practice is being assessed. What practices changes? How? What might be involved? Right? These are trigger questions for candidates to consider when faced with question of this nature. Okay. So what is the demand of the question, right? So uh, what is happening with current practices, conventional cost, what's happening with that, what's happening with the reputational cost, is it being considered right now, right? It's not being considered. And contingent cost such as decommissioning cost is a future cost, right? So decommissioning cost is not being incurred right now. Conventional cost does not gather or it hides the significant energy cost, right? So those things had to be discussed, but I'm pretty sure many did not. Pretty sure. So that's how this particular question should be answered. That's it for this video. Take care. Bye bye.